Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Chris Dearborn. He's a managing director on Nasdaq's market intelligence desk. Chris, it's great to have you with me. As always, all three major averages in the green today.
You know, on this day of remembrance, it's kind of hard thinking about what it was like 18 years ago, but the market's definitely remembered, and we're definitely off to a bullish run today. It's good to see that the markets themselves have been rebounding here in September, and it's coming into a pretty strong area. You've seen a lot of movement here recently, a lot of talk about momentum versus growth, but what you're looking across the board is a broad-based rally with a number of different large and small cap names outperforming, especially the Russell 2000 really kind of jumping up here. It's nice to see. You
know, it's really interesting that you bring up 9/11 and just thinking how different it is even 18 years later in terms of market structure, and how when you were on the floor and I was on the desk, just how our jobs have evolved and how the markets have evolved. So I appreciate you bringing that up. Let's take a look at our first chart today. We have the S&P 500 versus the Russell 2000. That's been kind of a key part of the story here, getting some outperformance. It really is.
So you're looking at growth and momentum versus value and cyclicals, and then there's been some continued conversation about a rotation here. Again, you're looking at fiscal stimulus being spent out there, especially like in Germany, with telegraphing a little bit. What we're looking at here is just a monthly chart, just the beginning of September, and it's the S&P 500 versus the Russell. So you have all the large cap names against all the small cap names for the most part. And I normalized this chart, meaning starting at 100, so it was an equal weight to start. The green line is the S&P, and it's had pretty good performance, and we're both up for this month, for the month. But the Russell is definitely outperforming by almost 2.5 basis points here, showing that there's significant risk on for small cap names into this market, which is a good, healthy sign coming into the end of Q3 and the beginning of Q4.
All right, let's move along to our next chart here. We are taking a look at the industrials index.
Yep, another solid chart. Brian put this together in our daily note today, and I couldn't agree more. What you're looking at here is a long basing trend of the Russell, of the the S&P 500 industrial index. And you've seen corrective action coming off of the December low, which is highlighted by the middle line there. It's a reverse head and shoulders pattern, and it's coming into major resistance here. If it breaks out above this level, and this theme of growth and momentum on a cyclical basis starts to change, this could have some legs to it. And Brian graphed it out. He thinks it's got a 25% move here to the upside if it breaks through this resistance level. Very impressive, and could be something that could really help boost the S&P and the markets as a whole moving forward, as this is one of the underperforming sectors for a while.
All right, so we'll be continuing to watch the small caps and the industrials. Chris, thanks so much for joining us at MarketSite. And an extra special thank you to our first responders on 9/11. I'm Jill Malandrino, global markets reporter at Nasdaq.